by contributing to the John Lothian News GoFundMe campaign to support the Markets Wiki Education history-focused video series, and more.
Too often today, when traders need help the most, their call is met with numbers to press on the phone instead of an actual person.
Advantage prioritizes you.
Personalized service, competitive pricing, aimed at giving you every advantage.
Make us your advantage.
Advantage Futures.
Growing up on the south side of Chicago, there wasn't a whole lot of options. But me and a buddy of mine used to play tennis when we were kids, 14, 13 years old. And I got really into tennis, believe it or not, back in the mid 70s, and became a competitive junior Chicago tennis player, 14, 16, 18s, and then the men's open. So my goal back then in the early stages of my early years was to be a professional tennis player. Well, through tennis, I met a gentleman by the name of Ray Conman. Ray was a tennis professional in Chicago as well, and a teaching pro on the south side. And I met Ray over at Wimbledon Tennis Club in Palos Heights when I was probably 14 years old, maybe 15. And, we all knew Ray. He had a pretty big name for himself in tennis. And we knew he was involved in stocks or bonds or something downtown. But none of us really knew what commodity trading was back then when we were kids. And but that's how I got my foot in the door, was knowing Ray. And I watched a good tennis friend of mine. He started trading at the Mercantile Exchange a few years before me. I think it was the CD pits before the S&Ps were open. When the S&Ps opened up, he was the first large local in there. And I went down to visit him because he's like, Bruce, you have to check this out. I never saw a commodity exchange before. I never saw open Outcry. I didn't even know it existed. And I went down to the Merc to see him trade one day from the gallery. And I'm watching all the hand signals and the selling and the buying. And I'm looking at him. I'm like, this is great, Mark. I wish you all the best, but I'm going back to the tennis club. I have no idea what you're doing. And, it was a little intimidating, and it was way out of my comfort zone. So, I went back to the club and we talked about it over the next several months. And there was a new little contract that was going to open up at the Board of Trade called the 10-year Treasuries. Mark Rochette said, go give Ray a call, talk to Ray, see how you could possibly get your foot in the door, maybe in this new 10-year Treasury pit at the Board of Trade. So that was 1982, and that's how I got my start. Was I had $2,000 in cash, and I borrowed $1,000 from a member that I used to teach that was well off, and he wanted to back me with $1,000. So I came down to the Board of Trade with $3,000 and a hope and a dream. And, you look back at that now and you just kind of shake your head, because it's obviously not possible, in this day and age to do that. I had enough money for they were permits. They weren't even seats. They were 10-year Treasury permits that the board put out. And, I had enough money for it was $12.50 a quarter. And I had enough money for about 2 quarters, maybe 2.5 quarters. And then I either had to make money at trading, or I was going to have to find another supporter, somebody who would sponsor me. There was 100 permit holders when I first started in 1982 that started the 10-year pit with me. And so there was 100 of us. So we were all, new blood, and the senior traders just kind of nipped us every day and picked us off, but they were gentle because they wanted to make sure we came back every day. They didn't want to kill us. They wanted to just, nickel and dime us to death. And so the 10-year Treasury permit was my first membership. I was in the 10 years from 1982 to about 1984. In 1984, the Board of Trade opened up a major market index, the MMI, and I had a much better feel. I never understood interest rates. I never understood the yield curve. I never understood spread. So when I was in the 10-year Treasury, I was like a deer in the headlights. I didn't have any studies of technicals or fundamentals on the markets yet. I was about as green could get. And as I developed those from talking to the old timers down at the Board of Trade, the guys that studied the charts and studied the technicals and fundamentals and the seasonals, I was able to talk to them over the next several months. and kind of develop a game plan and an understanding of how the functions of the futures markets worked. I had a much better feel for stock indexes, and the major market index was just 20 blue chip stocks, and it was very easy to track. I was very good at reading the tape and kind of studying which was the leader in the 20 blue chip stock department. Some particular companies would lead more than others, and I got a really good feel for the tape. And I made my home in the major market index until I went into grains in 1988 after the crash. I really didn't want to go to college. I wanted to go on the pro tour for tennis. That was my goal. I didn't want to waste my time in school. I graduated high school in '79, and back then, most of my graduating class, only a handful of kids honestly went to college. Most of them worked with their relatives' factories, blue collar work, factories, refineries, things like that, railroad yards. We were street smart kids from, the south side of Chicago, and that took us pretty far. When I started downtown with Ray owned a company called Aardvark Financial, and it was before it was Transmarket Group, much later. Everybody knows who Transmarket Group is. They were a huge clearing network at the Chicago Board of Trade, the Mercantile Exchange. And Ray had brought down not only myself from tennis, but probably in the late 70s, early 80s, I would say 50 additional junior tennis players that Ray knew from, CDTA, Chicago District Tennis Association. And tennis players made good traders. We were very competitive. We were generally very court smart, street smart, and we had a pretty good chance of surviving the pits, which, again, not having an economic background in college, not having any understanding of the futures markets as kids, but going in there green and cold, you had to learn quick. You had to hit the ground running. So, I learned from, when I was stood in the 10-year pit, I would watch my idols, which was, like Rob Moore, orchestrate the 30-year bonds. Lance Murdoch stood next to me in the 10-year pit. He was a good teacher. Carl Borrego was a great teacher in the 10-year pit. So I learned from those guys, and I did the same thing for the guys that came down after me from tennis. They were more tennis buddies of mine that I knew as a junior player, and I helped them out from everything I learned to try to make their break-in period, much quicker than what I had to go through. So I was always big on, being appreciative of coming down on a shoestring of the Board of Trade, protecting the Board of Trade for the next generation of kids like me, who would one day come down, hopefully on a shoestring, and have the same opportunities I had. So I was always willing to help young traders or even veteran traders that fell on hard times with just ideas on how they might be able to turn it around. I learned pretty quick. Again, Chicago, the South Side Chicago street smarts takes you a long way. It's like Harvard. I knew where not to go. A lot of guys would hang out after the close and hit the bar scene. Every time I would go into the bars, whether it was for lunch or just to say hi to some guys, I didn't see any of my idols there. The guys that I really respected, the 3% Club, the Tom Baldwins, the Dick Files, Rob Morris, things like that, Jimmy Hines. It was always the other guys, and no offense to them, but it just wasn't a place you really wanted to get in the habit of going to every day after the close, because it developed, obviously, bad habits. And, we all know those stories. So I kind of swayed away from that early on in my career. Plus, Deb and I were already engaged, so I didn't need any extramarital problems, or I didn't want to go down that path. I saw a lot of divorces over the years as well. Floor traders were one of extremes. Everything was an excess, whether it was money, cars, travel, girls, other extra activities after the close, and I just tried to stay away from that and focus on, building myself up as a trader, like I saw my peers that I really admired do. And I kind of followed their footsteps as I watched them develop as a young kid, and tried to merge that into into my trading style and my personal style as well. Trading was a balancing act over the years. I always joke, you'll see me on Twitter, trading is a marathon, not a sprint. I say that all the time. And I thank God I learned that early on in my career, because it is a marathon, and I wanted to make it a marathon. My goal as a trader was to be the next Frank Jost or the next Paul McGuire, where you're down there at 90 years old with your pencils and you're still in the pits. I admired those guys for their longevity. The guys that made millions of dollars and blew up or burned out after a few years, what can you say about that? The true heroes in my book at the Board of Trade or any other exchange were the guys that were down there 30, 40, 50, 60 years, multi-generational families that had brought their children, their grandchildren, and even some of their great-grandchildren down. Those were the guys that I said, they have it figured out. And I studied them. I looked at what they did, and I followed kind of their footsteps on, a social aspect and a trading aspect as well. It was a pretty easy roadmap to follow. Well, my parents were always pretty cool. They were blue collar folks, and they didn't know anything about what I was doing, and they just trusted me on the decision. And they knew Ray, and I said I was, going to work, through Ray, clear his firm, and they knew Ray, so they knew where to go if there was a problem and say, what are you doing to my son? Why is he a commodity trader now? And so that was the big thing. My father-in-law, kind of pulled me aside one day before Deb and I were married and sat me down, and he says, I just want to talk to you about this commodity trading thing. He says, isn't that like gambling? And I said, well, I understand your point, but I said, no, if you really focus on the markets, you're the house. So I always tried to turn the tables when my family or friends would say, well, you're just gambling. And I never looked at trading as gambling. I looked at it as, risk reward, risk management. I was adamant about that early on, and even today in my career, I was groomed that way, and that's a philosophy I've stuck with my whole career for 40 years. Not having so many fish sandwiches down at Brokers back in the day. So I would take, honestly, in all fairness, I would take better care of my health, but I'm okay. I can't complain considering everything I did for all those years on the floor. And like I said, I was lucky. I really don't have any regrets. I developed my style from some of the greatest traders that ever set foot on the Board of Trade floor. I was friends with Baldwin. I got to know Tom. Tom started a year before me. He was legendary in the bond pit. We used to talk about, the business and trading and stuff like that when I was able to pick his brain. Rob Moore, like I said, I don't even know if Rob knows he was my idol, but I used to watch Rob orchestrate the bond pit. The guy was he was the greatest scalper I ever saw. And I kind of went in as a scalp trader. I would work levels of the markets. I had my homework done in the mornings. I knew the resistance levels, support levels, from whether it's a daily window, a weekly window, a monthly window, and so on and so forth. I was a hybrid. I was, a technical trader and also a fundamental trader as well. So I was really lucky to have learned from some great guys. Frank taught me chart tricks. He taught me, everything about, the old Commodity Perspective magazine that we all fought in the library of the Board of Trade every Monday morning to take photocopies of the markets that we traded, because that's about as high tech as we were in 1982, was just grabbing that notebook when it came into the library and making photocopies of the 10-year Treasury pit or the major market index chart or whatever markets you were involved with that you thought were, key indicators of what products you were trading, and, learn how to trade from levels. And that's what, again, that all molded me into my style as a position scalper, fundamental technical trader, seasonal trader as I went into the grain markets, which, with the soybean market, on the seasonal basis, those things have at different times of the year. So I was able to develop that technique over the years, and I was a level trader. I would work the market to the next level up that I thought was key, or we're about to fill a gap, or if we're about whatever was on the radar. I knew it. I had it on my dummy card when I was in the pit. I had my whole game plan written out for me. When we got to a certain level, I'd bid it through to try to see if there was any interest there. If we were to the downside, I'd sell it through that level to see if there was any interest. Already obviously building a short run position, looking to push it through that level. That was my style. I did that all those years. And sometimes it ran and you had, really nice plays you could cover as everybody else was, hitting stops. You would cover. I was always adamant about covering when everybody else didn't want it. I wanted to lighten the load. And when I saw the weak-handed crowd join my position, I was never really comfortable with that. The more guys that piled on, I would lighten up. Those were the kind of pit tricks that you learned as a senior trader. It was heartbreaking. I worked with the Board of Trade. I was on a lot of committees, and I with the Dow project that I did in the late 90s, I think it was 97. My goal with the electronics was to save the floor and buy as much time as we could as floor traders. I wanted to preserve it. I wanted to keep it as well. A lot of guys didn't think I felt that way. A lot of animosity, from a lot of the floor traders. They thought that but that was the furthest thing from the truth. I always have been a pit trader. I always wanted to be a pit trader. I wanted my kids to be pit traders. So I wanted to preserve the pits, but at the same time, we had to electrify the floor, make it better for the customers with the electronic brokers, workstations and things like that, and make the board of trade up to date. We had to get with the program, because if we were going to buy any time on the floor, we had to change our ways, and we did that for a while. But the electronics were coming, and we all knew that, and that's one of the reasons I left the floor a little bit too early. I think I walked off in 2008, 2009. I should have stayed a few more years, because like I said, I had a lot to risk. I was making 7 figures a year at the time, and I was a very successful trader, and I had a lot on the line, and I wanted to adjust to the screen-based trading. And back in the day, when I was working with the board of trade staff, our vision of screen-based trading was FIFO, first in, first out, point and click. And that's how I thought it was going to be, a level playing field for all traders. First guy that clicks, we get it. There's no algorithms. There's none of these high frequency things. It was all FIFO. Okay, that's great. Let's do it. And that never materialized. And as you know, the rest of the story, once the screen-based market took over the volume from the pits were the tail wagging the dog. And at that stage of the game, I wanted to be in the primary market, which was the screen-based trading. And that's when I walked off the floor. The camaraderie, the board of trade, and I was at the Merck for a very short stint. They dragged me over there to trade S&Ps for a short period of time. But I was always a board of trader at heart. It was hard. It was in my blood. The exchange had been very good to me, with my career. I was chairman of membership for a while, and every time I'd see a young, 22 or 21 or 23-year-old trader come through the membership committee, I would smile, because I remember that day when I walked in that smoke-filled room with John Gilmore and Tom Brown and probably Tommy Cashman, and I had no clue. I was like a deer in the headlights in that membership committee meeting as a rookie trader. And, I was then the chairman of membership years later, and I saw the same thing with the young kids coming through the door looking for the same dream that I had years earlier. So I wanted to preserve that. And, I always felt that was important to, preserve the board of trade or CME for the next generation of kids that comes through, because, it was a great business. The pit the floor and the pit had a camaraderie where we looked after each other. When some guy would go bad, you'd kind of pull him aside and, talk to him and say, John, you're fighting this. Why are you fighting the funds? I know you just lost probably $50,000 or $100,000 in the last week or last few days. You could see it because you could keep tracking your head out, when he went bad or whoever went bad, or maybe it was me. I'd fight those guys too. And, you just didn't want to see anybody get hurt. And you kind of looked after each other. And that was the camaraderie of the floor. We were one big family at the Board of Trade, and I was honored to be a part of it, because I didn't have my grandfather down there. I didn't have my father down there, or my uncles or my aunts or any living relative. I was the only Williams down there from my family. And my goal, like I said, I've got a picture of my wall. I just posted it on Twitter the other day of actually it wasn't me and my kids. It's just my kids and O'Connor trading jackets on the Board of Trade floor. And they were like, 6, 8, and 10. And my dream was to one day build a dynasty down there with those guys, and and let them enjoy the same career path that I had all those years as a floor trader. Not everybody was a nice guy. There was guys down there that weren't ethical. There's guys down there that would, try to hurt you. And whether they were brokers or whether they were other traders that were envious of your position or who you were or whatever. I find that I just couldn't grasp that concept, because I was very competitive down there. There's no question. I kept to myself when I was in the pit. I was all 110% focused from when that bell rang to when that bell rang for the closing. And, not everybody was, not everybody was that way. And most people were, fortunately, but not everybody was. So you'd see some guys that were fed orders during the day. You'd see some guys that, seemed to be very conveniently short at the right time when stops were hit. You'd watch it over and over again and just kind of go, interesting. And again, being a Southside kid, I'm not stupid. I know what's going on. I'd watch it. Or when I'd turn the market, the market's 6, 7, I go, 7, 8 for it. And I wanted everything that was offered in the pit at 7 and 8. And all of a sudden everybody else is writing down trades and you're going, hello, I turn that thing. I want those trades. That's money out of my pocket. And they just kind of look at you like, who, me? What are you talking about, Bruce? And that kind of stuff I didn't appreciate. But I mean, it was part of the game. And you had to do. It was just part of the game. You had to accept it. I'd do my homework. I look at my charts, fundamentals, weather maps. I talk to Kevin Marcus at Cropcast several times a day, and sometimes at 3 o'clock in the morning when the new maps came out, and I had big positions on. So I did my homework. I knew I had the chart points. Like I said, daily, weekly, monthlies. I knew where the key levels were. I knew where the 50, the 50, the 100, the 200-day average was, which way the funds were sitting at the time. Are they long 60,000 contracts? Are they short 60,000 contracts of beans? And so I knew the game. I mean, I studied it. I knew that's what gave me the edge. And the remarkable thing about that statement is only about 3% of the crowd, maybe I'll go as high as 5%, really stood in the pit and knew that stuff and studied it and really made the difference. The rest of the other 95% of the crowd probably had no clue on any of that stuff. Maybe they were better off. I don't know. But the 3 to 5% of the crowd that really were the market makers that knew what was going on, that knew that, gosh, if we get beans through $14, they're going to run and gun. We'll probably go to the next level up. We got a gap to fill at 14, 17. We're going to push it to this next level and see if it follows through or not. We made it happen, and the crowd generally either just followed you, or if they didn't believe in you, or they would fade you. And that's okay. I mean, that's, it's your choice. You can be with me or against me. I don't take it personal. But that's what I would do. You come in with a game plan, you execute it every day. And not every day was Super Bowl. The energy level on the floor right before that bell went off, like in Trading Places, they have that clock that's ticking right before the buzzer goes off. Yeah, you could feel your heart, your blood pressure, your energy level would go up because you knew it was showtime and you knew what you wanted to do. You knew that the Cargill brokers offered 7s, and you knew the market was worth 9 or better. You wanted those 7s, you wanted those 8s, you wanted to jump, you wanted to be the first guy to jump it. So it was like a football game. And the intensity, or actually maybe I should say tennis. I could probably relate more to tennis than football. It was like a tennis match at Wimbledon, and you wanted to be the first one to nail that forehand down the line and grab what was in there to get your day started, where you got a nice cushion starting out. You're up 10, 15 grand, and now you've got a cushion, and you're going to continue to work the market to the next level and the next level and the next level based on whatever the market allowed to unfold that day. The 80s and 90s were amazing. I mean, I was a rookie in the 80s. I mean, even in the maxi pit on the 87 crash, I mean, think about it. I mean, the Dow Jones broke 25, almost 26% in one day. And I was just a medium-sized trader. And I was just cutting my teeth with everything clicking with my trading style and my game plans. As I was molding my career, it was about 1987 when I was coming in my own. And, it was unlimited. I mean, as a medium-sized trader that day on the stock market crash, I made $250,000, knowing what I was doing, but I wasn't as sophisticated as I was years later in the bean pit. In the bean pit, it would have been 10 times that, because I would have traded bigger, I would have had more confidence, and I would have pressed it a lot harder. So the economic opportunity. The average guy on the floor, like I said, even the sheep, the guys that would just follow everything everybody else did, or the small spreaders. I mean, those guys would make between $200,000 and $500,000 a year in the 80s and the 90s, and even the early O's. The great traders are 7-figure traders. I mean, and that's the grain room. And again, that's all I know. I didn't have the pleasure of standing in the 30-year pit with Baldwin and Moore and File and Jimmy Hines and some of the other big guys. Those guys could make $30 to $50 million a year. Charlie D. Some of the rumors are greater than that. Some people say 100 million. I know there was very few grain traders that could hit those numbers. Like Chuck Wafer back in the 70s and 80s, the Iceman, he was legendary. Ricky the Rocket was legendary. He was before my time. I only heard the stories about him and a couple of the other early 70s traders that, could knock it out of the park. When you think about the economic times with, making 7 figures back in the 70s or the early 80s, that money went a long way. You could buy a Mercedes probably for, back in the 70s, 10, 15 grand. You could buy a house, a mansion on Lake Forest on Lake Michigan, probably for a couple $100,000. So, I mean, their buying power of what they were able to do back then, to be able to, make that kind of money on the market, on the floor, was staggering. And in the 80s and the 90s, same thing. A lot of guys were millionaires. A lot of guys, made seven figures a year. But, the average guy that I knew in the grain room that was super successful, the 3 to 5% club, they'd knock out anywhere from 1 to 5 million a year. I mean, that was good for grains. And that's huge. I mean, and coming from Blue Island, who made $1 million a year? I didn't know anybody. On the whole block, you could add it up, and it wouldn't have been $1 million for all the dads.
Advantage Futures is proud to sponsor this JLN video series. In many of the series videos, there are recurring themes of people being helped at critical times in their trading careers. Too often today, when traders need help the most, their call is met with numbers to press on the phone instead of an actual person. At Advantage, you are our priority. Everyone needs an edge or advantage when trading. Make us your advantage.
John Lothian News would like to thank those individuals who have contributed to our Markets Wiki Education GoFundMe campaign. Their financial assistance allows us to produce and distribute videos like this for our Open Outcry Traders History Project or the Path to Electronic Trading video series. Join them in supporting John Lothian News, capturing the history of our industry.